Hello, my name is Vasil Tarsenko, I'm a Russian Tony. You should definitely watch this video if you are a foreigner residing in Russia but traveling a lot or just living in Russia for less than 6 months a year. Let's get it started. The point is that Russians pay 13% personal income tax not because of having Russian citizenship but because of their tax resident status. What is it? Tax resident status is not related to citizenship and place of permanent residential registration. The only criterion is a stay in the country of more than 183 days in the last 12 months. Where does the personal income tax of 30% come from instead of the usual of 13%? The point is only Russian tax residents pay a personal income tax of 13% while non-residents pay tax of 30%. In addition, tax residents of Russian Federation can apply tax deductions while non-residents cannot. This means, for example, that when selling an apartment, firstly, a non-resident will pay not 13 but 30%, and secondly, the tax base, the amount of which the tax will be calculated, wouldn't be the difference between the purchase and sale costs, but the entire cost of the apartment. Example: Russian tax resident bought an apartment 1 year ago for 1 million rubles and now sold it for 1,100,000. He will pay 13% tax only on the difference, but is from 100,000 rubles and the tax will be only 13,000 rubles. And if a non-resident did the same, he will pay tax for 330,000 rubles, 25 times more. The calculations is simple: 1.1 million rubles without any deductions and multiply to 30%. Perhaps you are not a tax resident either. Let's take a closer look. A person, whether a Russian or foreign citizen, is recognized as a tax resident of the Russian Federation if their stay in Russia is at least 183 calendar days in 12 months in a year, and these days can be intermittent. The main thing is that in the end it should be at least 183. Thus, the status may change throughout the year. But there are exceptions to the rules where a person stays in Russia for less than 6 months, but still remains a tax resident of Russian Federation, and these cases are as follows. When he or she was absent from the country due to treatment or study. If he/she is a military person or government employee and is on a business trip. If he/she performs a job or other duties related to the work or services in offshore hydrocarbon fields. And also when there is an international double tax avoidance agreement with the country where the person is located abroad and at the same time is a tax resident in that country. Until 2022, double tax avoidance agreements were signed by Russia with 84 countries. In a nutshell, a double tax avoidance agreement is an agreement between the governments of two countries that specifies the procedure for collecting taxes from taxpayers residing in one or both contracting states. For example, the Double Taxation Convention of the 15th of February 1994 between Russia and the United Kingdom in Article 15 that wages and other similar remuneration received by a person domiciled in the one contracting states in relation to work for hire shall be taxable only in that state. This provision contradicts the tax code of Russian Federation, which states that a tax resident must pay taxes even on income received abroad. But the convention is international and takes precedence over our country's tax code. Thus, if you had received a salary in the UK, you would not have had to pay tax in Russia earlier, but this is all the past. Since 2022, the vast majority of those 84 agreements between Russia and other countries have either been suspended by Russia itself or denounced by the relevant states. Now, for example, having earned money in the UK, you are required to pay taxes both there and in Russia, since tax residents of the Russian Federation are required to pay taxes and all income in Russia and abroad again, unless there is a double taxation agreement. Tax non-residents don't pay taxes on income outside Russia, but now pay 30% person's income tax on an income in Russia, as long as international double taxation agreements are suspended. And one more important change: since 2024, employers have to hold the PIT not of 30 but 13 even from the salary of tax non-residents if the employee works remotely and lives abroad in connection with employment in Russia's company. To summarize, we calculate that you need to mind the number of days that you are not in Russia. My name is Tarsenko Vasily, I'm a Russian attorney. Subscribe please. Bye.